So, welcome to NumismaTalks. Every second and fourth Thursday of the month at noon Mountain, we will be here with a new presentation. During the presentation, you may come up with questions. If you do, you can use the Q&A button at the bottom of your screen to send in your question, as all of you are muted on this presentation. Your question will be addressed at the end of the presentation. Now I'd like to introduce you to today's presenter, Jeff Pritchard. Jeff is a lifelong numismatist and retired financial planner. Spent over 35 years advising individuals, couples, and families on investment, estate, legacy, and philanthropic matters. He's authored numerous articles and books on personal finance. His most recent book being 529 College Savings Plans for Grandparents, Creating an Educational Legacy. Though currently retired, Pritchard serves on the board and oversees finances for Malaria Partners International, a malaria elimination organization affiliated with Rotary, for which he has made numerous trips to Africa, which you just got back from, Jeff, right?
Yes.
Jeff will be presenting Avoiding Numismatic Nightmares, Estate and Tax Strategies when it's time to sell or bequeath your collections. So, Jeff, I'm going to hand it off to you.
Okay. Thank you for the introduction, Paul. And I'll do our screen share. Okay.
Perfect.
Well, again, thank you. And thank you to those of you who have called into this. I thought I'd start with a story some of you may have heard. You know, there was this crotchety old coin collector, and he didn't have a lot of time left. And he told his wife that he enjoyed his collection so much that he wanted to be able to enjoy it while he was in heaven. So he asked his wife to help him move his collection up to the attic. So after he passed away, he could just take it with him. Well, the wife didn't think that was a very good idea, but she agreed and she helped him move his collection up to the attic. And a couple of weeks later, he passed away. Well, a few days after that, she went up to the attic and, well, sure enough, his collection was all still there. Now, she shook her head and said, "I knew we should have put this in the basement." Well, the moral of that story, and actually there's several, the main moral is that we can't take it with us. And there comes a point in every collector's life that after perhaps decades of putting together a historically significant collection and often a very valuable collection, there comes that time of what now? How am I going to wisely dispose of this collection? And so that's what this webinar is about. Some ideas and some concepts to help you consider that. Now, have some kind of caveats before we actually begin. First off, I'm going to be covering a lot of tax information, but it's not considered tax advice. Everybody's financial situation is unique. Everyone's family situation is unique. And then you layer on top of that all the different state regulations and rules. And so if you have a significant collection, and you're beginning to consider these options, you do want to sit down with your tax advisor, your financial planner, to get specific advice. Lastly, as far as the caveats, one of the nice things is essentially everything I'm going to talk about as far as rules and regulations from the federal standpoint apply to any collectible. And the IRS casts a pretty broad net when they use the term collectible. Doesn't it just include rare coins or sports memorabilia? It includes fine art. It includes jewelry. So there's a lot of areas of which this can be applicable. Well, I thought a good way in addressing this topic is to start with kind of the worst case scenarios. And this is what I've referred to as these numismatic nightmares. What is the absolute worst thing that could happen to your collection if you haven't planned properly? And I've got 6, although there's probably others. But the first one is your family, your heirs, they wind up only getting melt value for your collection. They've gone to the wrong place, they've gotten the wrong information, and they only get melt value. The second nightmare is even worse. And that's your collection's gotten in the wrong hands and portions of it are spent. Maybe that's currency, maybe it's Washington quarters or Roosevelt dimes, but they don't even get bullion value for your collection. It's actually spent. The third nightmare, and that is your collection becomes a future hoard. And I don't mean that in a good way. You've done such a good job of carefully hiding and securing your collection, but you get hit by that proverbial bus tomorrow and nobody knows where it is. The fourth nightmare, and this kind of relates to the first and second, and that is that the entirely wrong person winds up with your collection. Somebody has no regard for the historical significance of what you've aggregated over the years. And, this is something we don't have a lot of control over. Family members get divorced, they remarry, people pass away. And I should point out that the more esoteric your collection is, the more out of the mainstream. So think patterns, colonials, errors. The more out of the mainstream it is, the higher the likelihood that your collection could wind up in the hands of or in front of a dealer who simply doesn't know what they're looking at. The fifth nightmare, and this can happen to our family heirs or to us while we're still alive, is that we get that unwanted and unexpected letter from the IRS. We all know the IRS is getting more and more funding. They're going to have more auditors, and technology allows them to be more and more, well, I didn't want to say invasive, but I guess I will, more and more invasive. And so it's really important if you've got a significant collection that you're mindful of the IRS rules and regulations as your heirs should be. It's not something you want to run afoul of. And then the sixth numismatic nightmare, and this is one I take pretty seriously, is the whole issue of privacy. Home invasions these days are not a laughing matter. This hypothetical headline I have down there in the lower left column, if that appeared in the local newspaper, this hypothetical Betty Jenkins would probably be horrified because it's inadvertently put a bullseye on her back. And as I said, home invasions, a lot of times now the occupants are killed. So the privacy element is really important and something we're going to address as we go forward. So I thought a good way to kind of address these numismatic nightmares to ensure they don't happen is to walk through the 5 ways that you have to dispose of your collection. And I'll go into these in more detail. One of the nice things is, of course, this is not an all or none proposition. You can mix and match. You can use all these options if you wanted or only one. Very quickly, the first is to sell the coins during your lifetime. Second is to give the coins away during your lifetime. Third is to give the coins away after you're gone, so through your estate. Fourth is to donate all or a portion of your collection to a charitable organization, again, during your lifetime. And then fifth, to donate coins to a charitable group through your estate once you've passed away. So let's jump into these. The first, as far as selling the coins during your lifetime. Well, I think the biggest advantage there is that you know the area that you collect as well as anyone. And so you're going to know the best dealers to possibly work with, the best auction companies to work with. You're probably going to get as high or a higher price than your heirs might be able to get, just because you know the market so well. The other element that's a positive is that you're going to relieve your family members from the burden of having to sell it themselves. And if they're not familiar with numismatics, that can create a lot of stress for them. And then lastly, if you've got significant funds tied up in your coins, you may want those funds, you may need those funds for prior to your passing. Now, the one negative to this approach, of course, is that if you bought the collection or portions of it a long time ago, you've probably got some significant gains, and that would represent potential capital gain liabilities. And I'll touch upon that in more detail in a minute. I want to quickly go, and this is a little bit remedial, but really the 3 ways of selling the coins and the pros and cons of each. First, of course, is to go to a coin dealer. Well, you're going to get fast payment. A lot of dealers can absorb even the largest collections. And a lot of dealers today will work on consignment, so they don't have to bear the cost of taking it into their inventory. And that can be a win-win. you can get a little closer to retail by doing that. The negative or the flip side of working directly with a dealer is you are going to get closer to a wholesale price. Uh, Dealers are in business to make money. We want them to stay in business. And so you're going to get closer to wholesale. There's also the potential that they may not want all your collection. They may only want the very best items or the items that they tend to specialize in. And thirdly, if you don't have a specific dealer in mind, it can be kind of a logistical or administrative burden to get bids from a lot of different dealers. The second method of selling your coins, of course, is using an auction company. And certainly this is the most efficient from a time standpoint, from the collector's time. And the big advantage here, of course, is that the auction companies are incentivized on a percentage basis. And so it's in their best interest to get the highest possible price for your coins that they can. And so they're going to promote them, and often in a very sophisticated, aggressive manner, they're going to promote those to the people who they think will bid the most for your coins. There's a lot of specialization available in this approach. One of the things I think for collectors who haven't sold through an auction company previously is the seller's premium or the seller's commission ranges from anywhere from 10 to 0%, but it's negotiable. So, for example, the large auction companies like Stax or Heritage, they start at 10%. Some of the other auction companies that are based on an internet model alone, maybe only 0%. But even that 10% is negotiable depending upon what you have in your collection, how much those companies want to add that to one of their consignments. So it's something to remember. And the larger auction companies can facilitate a cash advance, if that's necessary. And that kind of leads into one of the negatives of using an auction company is there's a time delay. Between the time you consign the coins to an auction and the time you get the check back, that can take 2 to 3 months. And if you've got unique or esoteric items that would make sense to group with similar items, it may be 6 months before the appropriate auction comes up where they can group or add those items to the auction. So again, it adds to the time element. The other item I've got here, the last item, that your coins must qualify for auction. This is becoming less and less of an issue. The internet has really democratized the whole coin auction market. You've got some of the traditional firms, of course, that they have to be pretty premium coins to qualify. But you've got other auction companies such as Great Collections, where almost any coin can be consigned to their auction platform. And then, of course, the third option as far as how to sell your coins is by doing it yourself, doing it retail via eBay or Etsy or whatnot, or the new NGC marketplace. Typically in those venues, you're going to get a price closer to retail. You're going to get fast payment because you're paid kind of immediately via credit card, Venmo, PayPal. And that can be a good outlet for less valuable items that may not qualify for an auction format. The downside of this, of course, is that there are administrative and logistical things involved. If you're not already selling coins via eBay, you may not want to put up with the hassle of sending coins off, the potential returns, posting them. So that can be a detriment. And then, of course, your items may not sell. If you don't use kind of an auction format on eBay, for example, the items can sit there for quite a while. Okay, now I mentioned potential tax implications when you're selling the coins during your lifetime. And very quickly, if you've held an item for less than 12 months and then you sell it, any gains they're taxed at the ordinary income tax rate. If you've held the items longer than 12 months, and most collectors have held their items for essentially decades. The maximum capital gains rate that you'd be paying is 28%. This is federal tax. Now, if your income is below certain levels, you may pay much less than that. However, if your modified adjusted gross income is above certain levels, you may also be required to pay not only the 28%, but also the 3.8% Medicare excise tax. And you may reside in a state that has their own capital gains tax. So, for example, California has their own capital gains tax, and it's as high as 13%. So depending upon when you bought something, where you live, and your income, you could be facing capital gains taxes pulling 40%. So it's one of the reasons to sit down with a tax advisor or financial planner if you've got a significant collection with significant gains in those coins. Now, one of the questions that comes up is, well, if I have to pay potential federal tax on my gains, I've got some losses. Can I deduct those like I deduct losses on my stock investments? Well, for the most part, the answer is no. If you are classified by the IRS as a collector, you cannot deduct losses on the coins. However, if you're classified by the IRS as an investor, you can deduct those losses. The challenge, of course, is that by definition, the IRS considers that if you own collectibles, well, by definition, you are a collector. But if you think you are an investor first, and the overall IRS guideline is, you have the coins primarily for enjoyment, well, then you're a collector. You have them primarily as an investment, then you're an investor. The key here is if you think you are an investor first, you want to make sure you're operating in a very business-like fashion so you can defend that position if it ever came to that. You want to maintain very detailed records. Are you storing those coins at your home where you can look at them every night, or are you storing them in a safe deposit box? Are they insured? Do you have an investment-based reason to buy the coins? And do you occasionally sell? If you've never ever sold coins and then you go to sell all of them at once, it can be a little difficult to say that, well, you are an investor. Okay, well, let's move to the second way of disposing of a collection or portions of it, and that is you give portions or all of it away during your lifetime. And the big advantage here is, of course, you know exactly who it's going to because you're figuratively handing them your collection or portions of it. And the other element, and this isn't financial, but if you give portions of your collection to someone, maybe a child or grandchild while you're alive, it gives you an opportunity to mentor or coach them on your collection and to receive their gratification for your generosity. Again, not financial, but that can be pretty meaningful. If you give coins away or gift them, you remove them from your taxable estate, and I'll get into that. If you do have a significant estate and you have to be mindful of gift taxes, you can use the annual gift tax exemption, which is $17,000 per spouse. So if you're married, that's $34,000 total that you can give away every year to as many persons as you want without any gift tax implications. And then lastly, of course, if you're figuratively giving somebody your collection, you're going to have privacy. No one's going to know who you gave it to or how much that's worth. Now, some of the kind of negatives of this is that the cost basis carryover. So, for example, if you bought a high relief St. Gaudens back in the 60s for $1,000, and today that same coin's worth $30,000, if you give that coin to your grandchild, if they ever go to sell it, their cost basis is that same $1,000 that you paid back in the 60s. The other thing is if you give coins to somebody, if you want the IRS to consider that a completed gift, you can't still hold on to the coins and decide what happens to them. You have to literally have given them away. giving that person what they call dominion and control. And again, there can be potential gift taxes if you have a large estate. And again, I'll get into that in a little more detail. The third element, as far as ways to dispose of the collection, is to give the coins away after you're gone, so through your estate. And this is probably the most commonly used method for large, valuable collections. And the reason is that first item I've got starred, the step up in cost basis. Going back to my example with the St. Gaudens, if you give something through your estate, the cost basis is refigured for the recipient based on the value at your date of death. So with my St. Gaudens example, if your grandson now received that high relief St. Gaudens through your estate, his cost basis becomes $30,000, or the value of what it is based on when you passed away. Obviously, you can specify who's going to get those coins through your estate documents. And you can provide very detailed written guidance. Even though you're not still there, you can provide that in a written format. Some of the potential downsides to passing your collection or portions of it through your estate is the potential privacy concerns. And I'll get in a little more detail on that. The other thing is you may have a step down in basis for your heirs, for your family members who receive the coins. If portions or all of the collection has gone down in value, their cost basis will actually go down in value. It's based on the value at your date of death. And then, of course, once you're gone, it's a little difficult to enjoy the coaching and mentoring of that person about your collection or to receive their gratification. And again, there's the potential, depending upon the size of your estate, of potential estate taxes or inheritance taxes. So let's talk about that, because I've mentioned this several times. In 2023, for your estate to be subject to estate taxes, it has to be above 12.9 million. And when you add in your spouse, it needs to be above 25.8 million to be subject to federal tax. That's a pretty high bar. That's a level that most of us are never going to have to worry about. But there's a couple caveats to that. That high level expires at the end of 2025, and it will return to around the $6 million level. And because of the extremely high deficits the country is now running, there's a lot of congressional members that want to reduce it down more to the $3 million level. So that high level is temporary. The other element is that you may reside in a state that has their own estate tax or their own inheritance tax. Now, for example, I live in the state of Washington. Washington has an estate tax, and it starts at 2.2 million. The rate is anywhere from 10 to 20%. Oregon and Massachusetts have estate taxes, and they start at $1 million. Now, that's still not chump change, but when you look at what's happened to the price of real estate over the last 10 years or securities over the last 10 years, a lot of people are going to qualify for that $1 million level, and they may be subject to those taxes without knowing it. So again, something to be aware of. If you're thinking of passing a portion or all of your collection through your estate, some of the recommendations, and these are pretty standard, but first and foremost is to create a detailed inventory of your holdings and include as much information as possible. This is going to be a huge help to your family members, either for insurance purposes or if they're going to eventually sell it. And you want to maintain multiple copies of this. You don't want the situation where you've got this great inventory, but nobody can find it after you've passed away. The second recommendation is to provide detailed written instructions. First and foremost is location. Unless you do want your collection to wind up being a hoard, found 100 years from now, make sure everybody knows where that collection is. Secondly, and this is important, if you're reasonably confident that your family member is going to turn around and sell a portion of the collection, include the names and contact information of specific dealers that you've worked with and you know will deal with your family fairly, or the appropriate auction company, and include contact information. And then thirdly, don't forget, I guess what I would call very remedial information. You wouldn't want a scenario where you've given your collection to your grandson, and he's called the auction company and he's getting ready to put all those coins into a big box, and he stops and thinks, I'll bet if I broke these coins out of these little plastic containers and polished them, I could get a lot more money for them. So that's probably a seventh nightmare. So include even remedial instructions on kind of the care and preservation of those coins, because the people you're giving them to may not be aware of that. Update your inventory and your instructions periodically. Dealers change, auction companies' policies change. And then lastly, and this is probably if you're kind of sitting down, dividing up your estate, kind of allocating who gets what. It's common practice for us to kind of think about our collections based on their retail value. We all like to think it's worth as much as possible. But if you're giving your collection to somebody and there's a high likelihood they will sell all or a part of it, they're probably more likely to get the wholesale value, not the retail value, just because of the commissions and whatnot involved. So if you're allocating your assets to various family members, when you allocate the coins, make sure you're allocating based on the wholesale value. Otherwise, you might be inadvertently shortchanging that family member, because whereas everything else is, stocks and everything easy to value, but the coins, make sure you value on a wholesale basis. Again, you don't want to inadvertently shortchange that person if you want to be very equitable in the distribution of your estate. Okay. Well, I mentioned privacy, and it is a serious issue. If you had this sentence in your will, first, congratulations. That's a heck of a collection of proof gold coins. But this might really concern your daughter because, again, you've inadvertently put a bullseye on her back. Once your will goes through probate process, it becomes public domain. People can literally go in and read your will if you've gone through the probate process. Now, probate is simply a judicial administrative proceedings for the settlement of your estate. And if your estate is below a certain size, it doesn't even have to go through probate. So, for example, in California, if your estate is below 150,000, it doesn't have to go through probate. But there's ways around this if you want to pass your collection to your family members or friends or family through your estate. There are some ways to do it to ensure the privacy. The first is what's called a personal property memorandum. And this is really a set of separate instructions, separate from your will, which is applicable to tangible, non-titled assets. Okay. So real estate wouldn't qualify because it's tangible, but there's a title. But rare coins, fine art, jewelry will qualify for this. And it's a separate listing. You can type it up, you can handwrite it, you then sign and date it, that essentially just lists tangible, non-titled assets and who you want those to go to. One of the nice things about this is that you don't need, or I should say, you're not required to use an attorney to set this up. In fact, you don't even need it to be notarized. Now, I would always recommend you work with an attorney to initially set it up. And if you choose to change it, which you can always do, certainly wouldn't be required to use an attorney. But initially, it certainly makes sense to use an attorney to set this up. You need to reference it in your will that you have this document. You want to have good descriptions of the property that you're passing in this fashion. But again, you don't even need to have this notarized if you chose not to do so. Now, one of the caveats is only 30 states currently accept personal property memorandums. And these are the 30 states. So if you don't see your state listed there, there's other avenues to ensure the privacy. The key on both this method and the other is that the assets pass outside of your will, which means they don't have to go through probate. Another method, if you've got a significant collection and you're concerned about privacy, is to use a trust. And the most common way is to use a living trust, which means you've set it up during your lifetime. Now, functionally, these are actually pretty straightforward. You, the collector, establish the trust. You would do that with the help of an attorney. Setting up a trust like this might cost legal fees anywhere from $2,000 to $5,000, depending upon the law firm you use, depending upon how complex you want to make it. You then transfer the ownership of the coins into the trust. And then upon your passing, the trust distributes the coins per your written instructions to your heirs. Now, the best way from this standpoint to do this is through a revocable living trust. Revocable means you can change it at any time. You can change who you want the coins to go to. You can even cancel the whole thing. When it's revocable, it gives you all that flexibility. It also, from a tax standpoint, it's as if it's still in your estate. So your heirs would get a step up in cost basis. It would still be taxed if your estate is of a level where it's subject to taxation, but it circumvents the probate process. So even though the tax ramifications are the same, you ensure the privacy. No one needs to know how valuable your collection is or who it's going to. And this is actually commonly used by larger collections. You know, if you go into the NGC or the PCGS registry sites and kind of dig into some of the better collections for various types, you see a lot of those collections are in the name of a trust. So this is a process or a method that's being used by some of the more significant collections. The fourth kind of process to help you avoid those nightmares I covered in the beginning is to give all or a portion of your coins to a charitable organization during your lifetime. Now, there's a lot of tax advantage to this, but clearly the real reason you want to do this is if there's an organization or a cause that you care really deeply about, and you are going to make a significant gift to them anyway. By giving the coins, you're going to avoid capital gains tax because the charitable organization doesn't pay any capital gains tax, and you're avoiding them by gifting the coin. You're removing those coins from your taxable estate if that's a concern. And there's very likely you'll have a charitable tax deduction on your income taxes in the year or subsequent years when you've made that gift. And the other thing, which is nice when you make a gift during your lifetime, as opposed to after you're gone, is that you get to see the impact of your gift. You get to see how they're going to use that. And again, that can be gratifying, even though it's not a financial matter. The question, of course, is, will they accept your coins? Now, I say that because most charitable organizations have what's called gift acceptance policies. Now, the main reason they do that is around real estate gifts. Charity doesn't want to accept a gift of real estate and several years later find out that there was a gas station there 30 years ago, and they now have a huge environmental liability. When it comes to the coins, their concerns are going to be their staff time. They don't know anything about coins, the value, if it's really worth what you say it is this going to take a lot of time? Do they have to insure them? But there's a real win-win here if this is something you might consider. And that is you contribute the coins to the charitable group, but you then offer, as a volunteer, to help them liquidate them in the most effective manner possible. And that's a real win-win. You're going to take the headaches away from the charitable group, and they're going to able, by your helping them, to get the maximum amount for those coins. Now, I mentioned the elimination of capital gains, and I won't walk you through this in detail, but if you've got coins with significant value and significant gains embedded in them, and you're thinking of either selling them and donating the proceeds or just donating the coins, it obviously makes a lot of sense to just donate the coins. Because if you sell them, you are going to be subject to those capital gains taxes where the charitable group is not. If the charitable group then liquidates the coins, they'll get all of the proceeds, whereas you would have taxes deducted from it. So again, it's advantageous both from yourself and for the charitable group. Now, the tax deduction, which is a question that comes up, and that is, well, if I donate these coins, am I going to be able to deduct the cost basis or the fair market value? So with our high relief St. Gaudens example, are you going to be able to deduct $1,000 or $30,000 from your taxes? Well, that depends essentially on what the charitable function is of the organization you're donating to. If their charitable function is tied up in coins or numismatics or history or the art on the coins. So, for example, the American Numismatic Association, the American Numismatic Society, the Tokens and Metals Society. Obviously, all those organizations, their core function is related to numismatics. And in that case, you're going to be able to deduct the fair market value of the coins you contribute. But if you donate to the local YMCA or your local church, numismatics doesn't have anything related to their function, and so you're only going to be able to deduct the cost basis on those coins. Now, I'm not going to get into the details of administration details, just in the inference of time on making a contribution like this. If you're thinking of contributing all or a portion of your collection to a charitable group, sit down with their development director or one of their major gift officers. They can walk you through all the administrative requirements, how to, the qualified appraisal requirement, all the steps involved, what tax forms to fill out. Now, they can't give you tax advice, but they can help you with the administrative side of it, and that can be a big help. The fifth manner, as far as liquidating or disposing of your collection, I should say, is to give your coins to a charitable group after you're gone, so through your estate. And this is going to do many of the similar things. You're going to be supporting a cause you care deeply about. You're going to remove the value of that collection from your taxable estate. But I think the big shortcoming there is that what you don't get is the ability to see the impact of your gift while you're alive. And so for most donors, it can be more gratifying to make that gift, again, while you're alive, so you can see how they're putting it to use and receive their gratification, which again can be meaningful. Well, want to conclude, and I think I conclude with just 2 points. And I say that because a lot of times in these webinars, that's all we can really remember. But the 2 points that I want to really emphasize, and that is prepare today. If you want to avoid any of these numismatic nightmares, you want to prepare today. We all have had friends, family members, associates who have passed away unexpectedly, long before their time. And the idea is, if you got hit by that proverbial bus tomorrow, are things in place so that your collection is dealt with the way you would want it to be dealt with? The second element is to simplify your holdings or your collection. A friend of mine said that it's a lot easier to sell one $10,000 coin than 10,000 $1 coins. And like most collectors, you've probably got a lot of odds and ends along with your core collection. So as time passes, simplify those holdings as much as possible. Create detailed written instructions, inventory, how to dispose of the collection for your heirs. If you can do these things, if you can prepare today, you are going to avoid those numismatic nightmares that really can keep you up at night after putting together a collection over decades. You hate to see, or think about real negatives happening to it. So you're going to be a good steward for that collection, but more importantly, you're going to be a great steward for your family. And so with that, I thank you, and I'm happy to take any questions.
Thank you so much, Jeff. If you'll stop sharing your screen, thank
Yep.
you. There was some questions about whether this would be available later. It will. It's on our YouTube page, and you can just go to YouTube and search for American Numismatic Association, and then it'll be on the videos page of that. Okay, so is there a difference between gifting to a person versus a 501c3? And you might have already answered that. That came in.
Yeah, if you gift to a person, well, the 501c3 is a nonprofit. That's the U.S. code for a charitable organization in the U.S. If you do that, you're going to get the tax deduction, depending upon your tax situation, all the other benefits as well. So I think I answered that.
Yeah.
Yeah.
Okay. Are there implications of naming a dealer appraiser to liquidate the collections versus a direct gift?
No, that'd be unusual. I think the danger is if you name a dealer and then you forget to update your estate documents and the dealer goes out of business, or the dealer changes ownership and the new owner has very different policies or approaches. So I think I think a lot of folks might not recommend that because of the potential changes with the dealer, with the auction company, between the time you put those instructions into your estate plans and the time they may be executed. That's my opinion.
Okay. Next question. I have several coins from my type collection that are graded in slabs. Some other coins are not. What advice do you give to my heirs?
Well, I think the best advice in a situation like that is if you have a dealer who you've worked with, who you know will treat your heirs fairly, that's the best thing you can do is to pass along the name of someone who will treat them fairly, give them a fair price for those coins if they choose to sell them. Yeah.
Okay. I would like more information on donating to a charity, cost basis first versus fair market value.
Well, that's probably a whole separate webinar.
Yeah.
There's a lot of things I quickly didn't mention. You have to hold it for longer than 12 months. One thing is that is one break we get from the IRS is if you have bullion coins, and I'm talking pure bullion, Krugerrands, maple leafs, not with any collector value. The IRS considers those currency, and you can always deduct the fair market value of any bullion coins that you donate. There's no minimum holding period. They view true bullion coins as currency, and so you would always get the fair market value for that. The charitable function element gets pretty detailed, and the IRS, some of the regulations are that the organization you give it to has the capability to display it for something like 3 years. But that's something you would want to sit down with your tax advisor or financial planner on. And there's probably creative ways. If you donate to a university that has an element on numismatics or art that's encompassed in the numismatics, you might be able to make a strong case that the fair market value is appropriate there. But I'm actually not a tax accountant or attorney, and so wouldn't want to get too far down that road.
Okay. Next question. A married couple buy a coin for $1,000. One spouse dies and the survivor sells the coin for $10,000. What is the cost basis?
Well, that may depend if you live in a community property state or not. 8 states are community property. Run that through again.
Okay. A married couple buy a coin for $1,000. One spouse dies and the survivor sells the coin for $10,000. What is the cost basis?
Okay, this is almost like a question on the SAT test,
I was
isn't
going
it?
to say it sounds very test-like, yes.
Okay, but it's a good question. So what happens is, let's say it's a community property estate, and legally both spouses own half that coin. When the first spouse dies, his or her half of the coin is now reevaluated to the value at their date of death. So half the coin would be valued at 500 for the surviving spouse. The other half of the coin would be valued at whatever half of the value was when he or she died. Um, so it's obviously complicated, but typically you see that on real estate or really significant assets. But technically, if you got into that level, that's how you would deal with it, again, in a community property state.
Okay. So Jeff, this is up to you. Is somebody's asking if the slides will be made available? I know
Oh,
you.
please do,
Okay.
Paula.
So, if you want the slides, how about this? If you want the slides, I'm happy to email that to people. So if you want to email me, I'm just pnepper, PKNEPPER @money.org. So if you'd like to have those, then I can do that. There's several people here raving about how good your presentation is, so I want to pass that along. And
Gus, don't you want to read those so I can feel good? No, I'm
do you want
kidding.
me to? I will.
No, no, I'm just kidding.
Um, let's see. How should I deal with taxes as a cash player?
Well, most advisors are always going to recommend you pay your taxes. Um, I'll phrase it as a lot of transactions are cash. You walk through the burst floor and it's cash, cash, cash. And I would say it's I think many people inadvertently forget to report those gains or sales or whatnot. Legally you're supposed to. I, as an advisor, can't advise somebody not to pay their taxes. But legally you are supposed to record any gains you have. And I'll leave it at that.
Okay. This next question is, what is the best way to identify a dealer and what coins they would be interested and would be interested in, and those they may not be interested in? I will say that on the ANA's main page, money.org, there's a list of dealers that are members that you could go to find if you're looking for a dealer in your area. You put in your zip code, but I'll let you, Jeff.
Yeah, that's tough. I mean, only because you want to work with a dealer who's going to treat you fairly. And that I guess fair is an ambiguous term. Um, as far as identifying a dealer who um, specializes in the area you specialize in, whether it's going to a coin show and just walking the bourse floor and seeing who is selling what. And Paula, I'm not familiar enough with the ANA's page. I know there's the zip code function. I don't know if there's also a function for, if somebody has some ancients and they want a dealer who specializes in ancients. I don't know if the ANA page goes into that.
Yeah, I'm not sure about that one.
Yeah. So I'm not a very good answer. Sorry.
Okay, the next one, I live in Florida, family lives in Colorado. Do laws for state tax apply in Florida where I live or in Colorado where the kids are? Sorry, that was.
Well, if it's your estate, it's where you're a resident. So if you are a resident of, and I sorry, whether you're in Florida or Colorado, the state that you are a resident of, where you pay taxes, where you vote, etc., that's the state whose either estate tax or inheritance tax you would be subject to.
Okay. I'm going to keep asking questions till the hour, and then I'll be wary of your time. What happens if our items are so rare or esoteric that there are no records of a market value or a recent sale, i.e. the only known value is what we initially paid for the item?
So I don't know if the question is, The value. So what would they value at the date of death? This, for the step up in basis? Maybe that's the question. um, you would do an educated estimate.
Yeah.
Um, and maybe you take the original cost and factor in inflation. I mean, that's, a lot of these IRS rules and stuff, there's a lot of gray area.
Hmm.
Um, and if you can make a good logical case for what the value should be today, um, that's the best you can do. And again, for these to be, you have to be audited for some of these things to be challenged. A lot of this is self-reporting, and unless you're audited, in most instances, the IRS is going to take your word for these things. And if you're trying to be fair and making a good faith estimate, that's as much as you can do.
How do you establish acquisition dates if you have no documentation for tax purposes?
Estimate.
Yeah.
I mean, and the IRS, and this is something, when Paula and Rod Gillis had a presentation like this, he recorded about 3 or 4 years ago, which was very
Hmm.
good. One of the things is if you have trouble figuring out the cost basis, the IRS will accept like red book quotes at the time, things like that. Again, if you're making a good faith estimate and basing it on something, that's acceptable. And unless you're really kind of working the system. And anyway.
Okay. If I own a coin collection and my most expensive coin is worth $500, should I be thinking in all you just talked, thinking about what you talked about, my collection is nothing out of this world and not that expensive?
So
I
I don't
mean,
know
I
the question.
guess, do they need to worry about these things? I guess.
Probably not.
Yeah.
I mean, that's the kind of thing you can, just make a gift under the radar. It's not something you need to report. Um, this is really most applicable if you've got a significant collection, and because your estate is also pretty good size, where you may have, tax officials take a look at it. Um, if it's a modest average collection, this may not be an issue, and you don't have to worry about
Yeah.
that kind of. For example, a collection of that size sounds like it would fall under the 17,000 gift exemption, so that there's just not a lot of concern, unless it gets to be pretty significant.
Hmm. Okay. When selling through a coin auction, do they provide a 1099?
No,
Okay.
they don't
Um,
do any reporting. And I had a question come up with a similar webinar earlier this year. People were concerned about, would the auction companies start reporting proceeds or sales to the IRS, and that's pretty unlikely. I think what you could see is where banks um, are required to do more reporting to the IRS, depending upon what flows in and out of your account. So, you get a big check from Heritage or Stax or Great Collections or Legend or whoever. Um, if you deposit that in your bank account, theoretically, that could end up being noticed by tax officials.
okay. Do you have any experience with the collector versus investor with the IRS?
Um, well, personally, yes, and I was able to do. I had put quite when I was I don't know, I'm maybe 23 or 24. I put together an LLC, a partnership, to invest in coins, and went down. This was in 1980. Went down to the Garrett sale in Los Angeles and bought some coins out of that. This was when it was, I think, Stacks and Bowers, but anyway, um, clearly in an investment structure like an LLC or a partnership, you're making a pretty good case that this is for an investment, and it was. We liquidated that about 5 years ago, and uh, that was, classified as an investor, and again, never any pushback, because again, you really have to be audited for the IRS to say, well, gee, we don't like this. Um, and depending upon other issues with your taxes, that depends on, as far as how likely are you to be audited. It's unlikely. You want to follow the rules, but audits are the exception, not the rule.
Mhm. Can't you sell $9,999 worth of coins without IRS implications?
No, I think what that person might be thinking of is if you deposit $10,000 into a bank, they will report that. Interestingly, if you make a whole bunch, every day you make a 5,000 deposit, that's viewed as trying to circumvent those rules, and you'll also be reported. Now, it's not reported like you're doing anything bad; it's just reported. So I'm assuming that's what that person is really referring to. Because if you bought a coin for $100 and sold it for $9,999, theoretically you've got $9,899 of profit there that should be reported to somebody.
Do most sellers actually declare it on their tax return?
I'll pass on that.
It's fine.
That's legally you're supposed to report all gains, but I'm sure in the heat of a coin show, many people inadvertently forget to report things.
Would a separate writing be just as strong as having the written instructions inside the trust? Would a separate writing need to be notarized?
I think by their writing, they're referring to that personal property memorandum. Generally, the reason you would use the personal property memorandum is because it's less expensive, more flexible. If you've got a real significant value to your collection, I think most attorneys or advisors would say use a trust, just because there's less likelihood for it to be challenged or something like that. If you have a $5 million collection and you're using a handwritten note to pass it along, people who don't benefit from that may challenge it one way or another. I think it's a legal way, but that's the reason that even using that, it makes sense to get an attorney involved to make sure you're not inadvertently making a mistake somehow in setting it up.
I'm going to go ahead and stop there. I do see somebody that asked about what the community property states are. Did you have that in your slides? Or that was
no.
another one.
There's,
Okay.
There's 8 of them. I know Washington and California are. You can Google that in 15 seconds and see which ones they are.
Yeah. So I know there were still some questions, but I do want to just be aware of your time, Jeff, and if they still have more questions, Google or email me. if I could pass an email on to you if that was
useful. If you want to pass an email, that's because I'm happy to answer any questions or even do a little quick research. But if you're willing, Paula, to forward those to me, that's fine.
Sure, I would do that. If those people that didn't get their questions answered, again, my email is pnepper, so KNEPPER @money.org. And I just want to say a huge thank you. This was obviously very popular, Jeff. I appreciate you doing it with a lot of great information. And for those of you that are here, make sure you check the money.org website and look at the events and e-learning, and that's where you'll find future NumismaTalks. So thank you so much.